So let's turn now to Larry Adam to talk more about this record-setting market. He is the Chief Investment Officer at Raymond James. Larry, nice to have you back with us. Welcome.
Thanks for having me.
Is this move in the S&P 500 and the broader market sustainable in your view?
I do think it's sustainable for a couple of reasons. As you mentioned earlier in the show, there's no recession. And as long as there's no recession, that tends to be very positive for the equity markets. The second reason is that I do think you're going to see an acceleration of earnings growth going into next year. When you have better earnings growth, that tends to be supportive of higher equity prices. And then third, I do think you're going to see some positive seasonality. As Bob said earlier, this tends to be the best time of the year. The fourth quarter tends to have the best performance of the 4 quarters. And that positive seasonality tends to extend into next year, because when you have an election year, that tends to be very good for the equity markets. 90% of the time, you actually have a positive equity market, and that's regardless of whether or not the incumbent or the challenger wins.
And what about the trade situation? Because that has created so much volatility, both on the upside and the downside for investors. But you think the language, or at least the optics, have changed a little bit?
Yeah, I think if you looked earlier, it was a lot of hardball kind of discussion that was taking place. I think when you look at this upcoming meeting in November 14th and 15th in Chile, where you're going to see President Xi from China and President Trump from the U.S. get together, I think they're going to want to play ball and get something done, because both of them understand the importance of getting a deal done to help support the economy of both countries going forward. So I think they will work very closely to get a deal, and that will be a positive catalyst for the equity markets.
We mentioned the fact that the overseas markets were all higher in today's trading session. Would you be putting money to work in the overseas market, or do you think it's better to be domestically invested?
I still prefer the U.S. equity market over the international markets. First of all, if you do look at economic growth, it is still better here in the U.S. than what you're seeing overseas, because those economies are struggling. And that's bleeding through into earnings growth. When you look at the earnings growth of U.S. companies, right now they tend to be much better than what you're seeing overseas. Mm-hmm. And then the other thing that I think is very important is you have to understand what you're buying. And when you look at the U.S. equity markets, we have a lot more technology exposure. And that happens to be one of my favorite sectors. And you're going to see that, I think, during this earnings season, that's an area that you want to be in. So that's why I continue to favor the U.S. equity markets.
On that note, Larry Adam with Raymond James. Larry, thank you so much.
Thank you, Sue.